Is financial chaos coming? Inflation and interest rate uncertainty. Recently, stock markets have been experiencing volatility due to concerns about inflation. Any news suggesting higher than expected inflation in 2025 has led to stock declines. Last week, the University of Michigan's consumer survey showed inflation expectations reaching their highest level in over a year, which initially rattled markets. However, losses were largely recovered within 2 days. A similar situation occurred on Wednesday when the January Consumer Price Index, CPI, came in higher than expected, fueling fears that the Federal Reserve might limit interest rate cuts in 2025. Previously, markets had been pricing in 2 rate cuts this year, but now only 1 cut is being considered. Some economists believe that the Fed may not cut rates at all in 2025, and there is even a possibility of a rate hike. Bank of America's Aditya Baba stated that a rate hike could be considered if core PCE inflation rises to 3% and long-term inflation expectations become unanchored. Deutsche Bank's Matthew Lazzetti also acknowledged the increased possibility of a rate hike but still sees a rate cut as the more likely scenario. However, markets did not see a sharp sell-off. On Wednesday, the S&P 500 declined by just 0.3%, while the Nasdaq ended the day in positive territory. This could be due to the fact that investors still expect at least 1 rate cut this year and that the Fed has not sent a clear signal about tightening monetary policy in 2025. Ultimately, the biggest risk for markets remains rising interest rates. Over the past year, increases in the 10-year Treasury yield have often coincided with fading hopes for rate cuts, putting pressure on stock markets.